U.S. stocks dipped broadly across the board following the news of the GOP's failure to push their health care bill through the Senate. And the U.S. dollar index, which compares U.S. currency with other major currencies, slumped to its lowest in nearly a year after news of the failed Obamacare replacement. Zachary Karabell is president of River Twice Research and head of global strategies at Envestnet, a publicly traded financial services firm. He joins us now. So what are we seeing when it comes to the health care debate? We saw in 2009 a correlation with the stock market and Obamacare. Are we seeing that now as well? We
are not seeing that at all. I mean, yes, it's true. Very technically, markets are dipping, but they're dipping about yay much. And yes, there's a certain tiny reaction in certain stocks to the health care bill debacle, but it's nothing resembling a, oh my God, this has failed sort of reaction. It's more of a shrug than it is a panic.
We saw Goldman down today. That's a company that obviously everyone watches. What do you see? The fact that healthcare doesn't appear to be going anywhere. Goldman had a significant drop. Job growth under the Trump administration looks positive. June, there were 200,000 job increase, but the unemployment rate rose. So break down these numbers of the economy under the Trump administration.
Look, if you really look at this over a 2-3 year period, there's been very little change in the employment picture. It's been getting gradually better every month, 100,000 to 200,000 jobs. We're in the economy we're in. Not a lot of people are joining the labor force, a little bit here and there. So the idea that Trump gets elected and the markets soar because Trump gets elected, first of all, we'll never know what would have happened under Clinton. And ascribing, there's a whole like correlation versus causation. Just because two things happen simultaneously doesn't mean that one caused the other. There's a lot of reasons why markets have been very strong for the past month, because corporate earnings overall have been very strong. And when they're not very strong, as with Goldman Sachs today, markets react. They sell off those names. Goldman had a tough quarter. But in general, companies are making huge amounts of profit, huge amounts of revenue. They're actually making more revenue than they were over the past years. Profit's still been incredibly good. And that's where markets are, right? Markets are about how their underlying companies are doing. And that would have been the case 30 years ago. It's only really in the past, 15, 20 years where markets in Washington started to go lockstep, and now they're detaching once again.
Are you surprised that there's this detachment between what Washington can get done and what Wall Street is doing?
Look, I think a lot, it's very hard to describe, human characteristics to anthropomorphize markets, but we do it anyway. The idea that you should constantly be trading and gaming out scenarios based on rumor, innuendo, proposals being floated. A lot of market participants have clearly gone, look, it isn't clear that anything's going to happen legislatively in Washington. It isn't clear that the Senate or the House can work with the White House, resolve their differences, even with a Republican majority. And so until something actually happens, it's all just noise. It's all just yapping. And why should we spend a lot of time trading the noise when we can trade Goldman's earnings today? We can trade Netflix. The reason why the NASDAQ is up today is because Netflix added 5 million people, subscribers, this quarter. Now, that affects the warp and woof of society a lot less than healthcare, which affects everybody and will cost a lot more. But it tells you markets are trading their companies. They're not trading our society.
If Washington doesn't get any sort of tax reform pushed forward, do you think that'll have an impact on Wall Street? Is there a way of sensing that?
Look, there are a lot of people who are saying it will. But if you take from what's going on with healthcare, then it won't. So again, if markets are doing what I think they're doing, which is going, look, we're gonna deal with what companies are doing. We know Netflix did X or Y. We know Goldman did Y or Z. We have no idea what Congress is going to do. And until it does it, we're just going to let it be, because until anything happens, nothing has happened. And why bother wasting money, energy, speculation on such great unknowns as, will the Republicans in Congress work with Donald Trump? We don't know. And markets, I think, for now are going, because we don't know, we'll just deal with what we do, which is how companies are doing.
So what are you watching for in the coming months when it comes to Wall Street and the U.S. economy?
So again, our company's continuing to increase revenue, which is different than earnings. Are they adding more business globally and domestically? Does trade policy start to impact global companies that are globally exposed? Hasn't happened yet, but it's something to look out for, because there's a lot of negative noise about trade and globalization, and half the profits of the S&P 500 come from outside the United States. So I'll be interested to see if that gets negatively impacted by trade policy coming out of the United States. Other than that, let's see how Netflix does for the next few months.
All right. Zachary Karabell, thank you for joining us.
Thank you.